Hi, I'm Mike Capizzola from the Investing Channel, and welcome to IP Go, the show where we take a look at the IPO world, past, present, and future. As we predicted last week, the IPO calendar was essentially empty ahead of the Labor Day weekend as the market takes a break ahead of the unofficial end of the summer. Though companies are not coming to market in these last few days of August, there are plenty of businesses that are making plans to do so in the not-too-distant future. Among them is private equity powerhouse TPG, formerly known as Texas Pacific Group. The company manages around $96 billion in assets and has invested in businesses such as Airbnb, Box, Cirque du Soleil, Ducati, Livono, and Spotify, among others. TPG is the latest private equity manager to consider listing itself. Back in June, we highlighted the impending IPO of London-based private equity fund Bridgepoint, whose stock jumped 28% above its IPO price on debut. 166 staff members and investors in the business shared a pot of around $520 million between them as a result of the flotation. Shares in TPG's quoted rival Carlyle Group have risen by almost 54% year to date as investors look to diversify their portfolios and gain exposure to private equity investments, which are usually the preserve of sovereign wealth funds, ultra-high net worth individuals, and institutional investors. TPG is said to have hired Goldman Sachs and JP Morgan to advise on the deal. Though the company hasn't completely committed to an IPO as yet, any deal is thought likely to value the business at around $10 billion compared to Carlyle's $17 billion market cap. Another deal that's caught the market's imagination this week is the proposed listing of Virgin Orbit, Virgin's second space venture, which is designed to enable the delivery of small payloads into orbit via their Launcher One rocket. Virgin Orbit would come to the market in a merger with the Next Gen Acquisition Corp. 2 SPAC, a deal that would value the company at $3.20 billion and provide it with some $483 million of capital. Some of that money will be provided through an investment from Boeing and AE Industrial Partners, and the cash will be used to scale up the growth of the Space Solutions business. Virgin Galactic shareholders will retain a controlling interest in the spin-off company. Virgin Galactic effectively kicked off the SPAC frenzy when it listed in October 2019, and it's been a bumpy ride for Virgin Galactic stockholders over those last 22 months, though the stock currently is up by more than 120% over that period. More recently, Virgin's founder Richard Branson won the Battle of the Billionaires to become the first of the select group to launch themselves into space. Staying in the world of SPACs, you may recall that last week we flagged a lawsuit that had been lodged against Bill Ackman's Pershing Square Tontine Holdings, the largest SPAC listed to date. The suit alleged that the SPAC was in breach of legislation governing the management of investment companies. Mr. Ackman seems to have conceded defeat and has said that he'll return the $4 billion of investors' money that the SPAC holds if the SEC approves his latest proposal for a new investment vehicle. Mr. Ackman was quoted as saying, "If you find yourself in a leaky boat, oftentimes you're better off switching boats than patching leaks to complete the mission," an analogy previously used by the sage of Omaha, Warren Buffett. Research out this week suggests that U.S. markets are attracting European IPOs at the fastest rates since the year 2000, which is good news for Wall Street because China is reported to have halted 42 planned IPOs as part of its probe into a local investment bank. This is the latest move in a series of clampdowns, which have effectively made the Chinese new issues market a no-go zone for U.S. bankers and investors. One company that won't be making the journey over the Atlantic to list in New York, however, is UK-based Interactive Investors. The retail trading and investment platform is backed by U.S. money manager J.C. Flowers and is completely debt-free. The London-based broker is looking to come to the London market in 2021 with a valuation of £2 billion or $2.75 billion. Unlike many of its peers, the business acts like a club and charges its members a monthly fee, which is then credited against a client's trading commissions. The business has 440,000 customers with some $75 billion of assets under administration and is keen to facilitate retail access to IPO markets in the UK, which for the most part remain off-limits to private investors. Much like Robinhood did, Interactive Investors is likely to make a significant chunk of its IPO available to its own retail customer base. That's all we have time for today, but as usual, make sure you do your own due diligence before making any investment decisions.